Disney is betting big on this new streaming service, spending big. Some analysts say it won't be profitable for 4 years, and some reports out there say that some of the original Marvel shows on Disney Plus have a budget of $25 million per episode. Woo! Joining us live from Austin, Texas to discuss is T.G. Watkins of Simpler Trading. T.G., thanks for joining us. Just how big could this be for Disney? How much of a threat to Netflix?
Hey, good morning. Well, I think it's going to actually be a huge threat. They've got the capital, they got the money behind them to really, as you say, take some losses in the beginning and build up that clientele and get everybody on board, show them the kind of subscription that it's going to be like, and then maybe run over Netflix, or at least give them a good run at their money.
Well, I mean, yeah, is there any sense of how profitable this could eventually become? I mean, we know the legacy media business is still very profitable. The margins are good in that business.
Yeah, well, I think what we're seeing is with everything going over to internet and with Netflix, they've shown that this can be profitable. They're doing well, and I don't see why Disney getting on board next and kind of trying to compete with, ESPN, actually taking on ESPN and things like HBO. They're going to do pretty well, and they've got the backing behind them. They're just going to say, hey, we're new to this space. Let's get everybody on board. Let's show them what we have so that they really like it. Like, as I said, they have 4K streaming. They're going to be really throwing some extra add-ons at a lower price to get those people on board, and then maybe they'll start looking at profitability later.
Extra add-ons and a low price, as well as, we've seen how there's a lot of options out there, and we've seen the consumer behavior when it comes to HBO Go or HBO's platform when, Game of Thrones was out. Do we see that kind of flow possibly happening for Disney as well, or are they looking for really, consistent customers?
I do think that they're going to be looking for consistent customers, but they need to have those kind of box office hits. Like you said, Game of Thrones, they're going to have to figure out what it is that they need to bring on board to really draw those people in for those bigger shows, whether it's going to be Marvel movies, whether it's going to be some other something that we don't quite know yet, but they're going to get it on board, they're going to make sure everyone's happy, and then they're going to kind of knock on those doors, I think.
TG, let me ask you, when we talk about Disney Plus and Netflix and Apple TV Plus, initially, for the last few months, a lot of stories would pit those against each other and say, uh-oh, it's a big competition here. But more recently, what we're hearing is actually, at least in the near future, most consumers who are used to paying for OTT apps are still willing to add more before they cut. That is, these aren't mutually exclusive. People aren't going to cut Netflix, at least at first, to add Disney Plus. They'll just add. And so you wonder when that time will come, when we do hit the tipping point where suddenly more people decide, wait a minute, I'm paying for 8, 9, 10 of these things, it's time to cut a few.
Well, you're correct about that. The other thing to think about this, because I was going through the numbers the other night, is some of us are kind of used to paying quite high prices when it comes to cable. I mean, think about sports networks or what we used to be paying for satellite and cable. Owning multiple of these are now cheaper in the aggregate than owning cable and satellite. So maybe for, as I said, quite some time, people are going to be okay owning multiple of these and paying a fair amount because just the overall cost is less. Maybe in the future, as they start to kind of aggregate everything and congregate, then they will start figuring out which ones they want. But I don't think it's going to be too much of a problem initially.
TG, let's talk about the stocks before we let you go. I mean, how much more room do Disney and Apple have to run specifically thanks to streaming? I mean, Apple TV Plus, for example, brand new, not great reviews so far of the shows, but Apple just has that huge install base. So that's a built-in audience that are going to become subscribers to Apple TV Plus. How much of the stock gains over the next few months do you think can be contributed directly to Apple TV Plus? And same for Disney. Is that a streaming play now?
Well, as with Apple, it almost seems like it might be already baked in the cake. Apple, over the last couple of weeks, months, has been doing phenomenally well, and it's really quite incredible what they've been doing. Now, Disney, if we look at a longer-term chart, I was actually just showing somebody this morning that they've now pulled back to some key support on the higher time frame charts, and they look like they're exactly poised to really take off and get going. And at only about $130, they've got a lot of room to the upside to go compared to where Apple is or where Netflix is. So I think Disney would be a real good play, but Apple looks like a really good one as well, considering it's, the rest of the real importance is where it has been going over the last few weeks, which has been straight up.
All right, T.G. Watkins of Simpler Trading. Good stuff. Appreciate it. Talk to you soon.
Great. Thank you.